In this video, we are going to be analysing Amazon, ticker AMZN. So what are we looking at going forward? So again, this is having to be pre-recorded, I think a day or two before it's actually going to come out. So do adjust for probably a few points either side, but overall the analysis is still going to be the same, and what we're looking for is not going to change within those few days. So if we push to the upside, we do have statistical mean at $100 to $98. Now this is key to note because this is what is considered fair value. So really buying anywhere below here from a trading perspective, your upside is this target. So your upside, if you're buying, for example, right as we're recording this video, is at $90. You still got 8 points of upside, but here it's going to be a difficult trade to take because where is your stop going to be? Is there any reason for it to reverse at this level? And the answer is no, not really. But that's really how we use this statistical mean and fair value as basically your target from the trading perspective specifically. Now, how do we use this, especially from an investment standpoint as well? Because the reason I cover this on Amazon is it's also a company I imagine a lot of you also are looking to or already are invested in. So basically fair value, this is where I would always usually start building a bit of size, because this is fair value. So from an investment standpoint, this is considered quite a good value. Now if you can get it anywhere below here, this is basically discounted and definitely good from an investment standpoint. So this is usually what I wait for. When we hit $100, I did get a bit of size, but really probably get in a bit, maybe a small size now, but really I'm waiting for, if we can continue down, 81.75 is going to be a key level to me. Because again, this is quite a low level. So here, from a trading perspective, I would expect a bounce at the minimum, and that would be a trading perspective. But also from an investment standpoint, this is a big discount, and it wouldn't be unlikely to see a reversal here. So getting in long around this area is definitely something I'm interested in doing. Now though, if we continue down again, like from a trading perspective, and that's all we're focused on from now, first time you hit it, expect a bounce. So that's my first trade opportunity. I'll look to have quite a tight stop, play the bounce, move up to break even after when we're up a point or two, or even just a few points. Moves up to break even in anticipation of it being a reversal, and then that's where the big upside will be, because then we can look around for 15 plus points on that trade, and we only be looking for maybe a point or two to the downside. So that would be what I'd be looking at. And the reason we lock in some profits up a few points is because at the minimum we expect a bounce, so we can lock in some profits, move us up to break even, and 9 times out of 10 we can make that trade risk free. So that's how we look to trade it. Now if we come back to retest this level, we end up breaking through. Then what I'm looking for is a retest of this level, and if you see selling pressure kick in and you start seeing it kind of making new lows, we would have a target down to $75. If we break that, we've then got targets of $62, $50, and really that's all I'd be focusing on. Yes, you've got levels going lower, for example $43, but really I think it would be unlikely to see, even in weak conditions, that Amazon break below that $50 level. So that's what I'd be focusing on from a support side. Now if we start to break to the upside, we break through fair value. Again, not a level I trade off of, so I wouldn't be looking to take trades of this level, just instead trade to it. Now if we can break through there, then I'm looking at $120, $122 as resistance. Again, as these are so close together, use this as a range. So the first time we hit this range, I'd be looking to short. If we retest it, then I'm waiting for a break above, come back to retest it as a support, and if it holds, then I'm looking at it more long bias, and I'd be having a target of around 138 to around 46. As these levels are quite far apart, I wouldn't be looking at this as a range trade, just instead of using them as separate levels. If we go higher, we're then looking at 158, 170, 178, and a final level at 195. And like we said to the downside, we don't really see $50 coming in. Also in the near future, I don't see really breaking above 150, because again, market conditions are still relatively weak. The economic outlook still isn't looking strong. So it would, and the yield curve is still inverted. So these are multiple reasons why I wouldn't be ever buying at these kind of highs, because really you just take on a lot more risk than there is reward. So that's what I'm looking at, and kind of my breakdown on Amazon. I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.